Commodities. Unraveling the crypto token debate amid SEC's lawsuits against Binance and Coinbase. Welcome, everybody, to the Bite-Size Brilliance podcast. I'm your host, Digital Dan, and today we're diving into the ongoing debate of whether crypto tokens should be classified as securities or commodities. This issue is becoming increasingly important, especially with recent SEC lawsuits against major cryptocurrency exchanges like Binance and Coinbase. So let's get right into it. The current legal landscape surrounding cryptocurrencies is rather complex. The Securities and Exchange Commission, SEC, regulates securities, while the Commodity Futures Trading Commission, FTSE, oversees commodities. Oversees commodities. How a cryptocurrency is classified has a significant impact on the future of digital asset regulation and the broader crypto landscape. Now, what are securities and commodities? Securities typically represent an ownership interest in a company or a claim on a company's assets and earnings. They are generally subject to more stringent regulations and reporting requirements than commodities. Commodities, on the other hand, are tangible goods or raw materials used in commerce like gold, oil, or wheat. They are subject to different regulatory frameworks, often focused on ensuring fair trading practices and preventing market manipulation. The key question here is whether crypto tokens such as Bitcoin and Ethereum should be treated as securities, commodities, or something entirely different. This debate is not just academic. It has real-world implications for both the industry and individual investors. For example, if a crypto token is deemed a security, it would need to comply with SEC regulations, which can be costly and time-consuming. If it's classified as a commodity, it may be subject to different regulatory requirements and potentially more lenient oversight. In recent years, the SEC has taken a more aggressive stance on the classification of certain cryptocurrencies as securities. This has led to numerous lawsuits and enforcement actions against companies and individuals in the crypto space. The SEC's approach is primarily based on the Howey test, a framework established by a Supreme Court case from the 1940s to determine whether an asset is a security. Under the Howey test, an asset is considered a security if it involves an investment of money in a common enterprise with the expectation of profit derived from the efforts of others. Applying the Howey test to crypto tokens has been contentious. Some argue that many tokens meet the criteria, while others believe that the unique nature of cryptocurrencies demands a new regulatory framework altogether. In conclusion, the debate over whether crypto tokens should be classified as securities or commodities is far from settled and has significant implications for the future of digital asset regulation and the broader crypto landscape. As the SEC continues to pursue enforcement actions, the industry and individual investors alike will need to pay close attention to these developments. Thanks for tuning in to this episode of the Bite-Size Brilliance podcast. This podcast was co-produced by Daniel Oronoff and Mogul Media IE.